What's up, guys? It is Sam here from Market Movers, and today I'm going to be talking about 4 stocks that I am actively buying at the moment. I do think that these are fantastic deals, and you should definitely be considering looking at some of these as well. So, guys, just remember this is not financial advice, it's just my opinion. You can either take it on board, but always remember to do more research when looking into any kind of stocks or any financial solutions that we do come up with. Do your own research, so I can just don't take it as a pinch of salt from us. So, guys, without further ado, I'm going to get into this. Before that, just do hit the like button and do hit the subscribe button. It helps out an awful lot. We're nearly at 500 subscribers. It's absolutely fantastic. And look, guys, we will see you in the video. And do check out all of our sponsors down below with Caffe Pompeii and also 35mm vintage as well. So, guys, without further ado, let's get straight into the video and we'll go over these 4 stocks. Right, so guys, the first stock up here is Meta Platforms, otherwise kind of known as Facebook. We've talked about it before. It's basically the ugly duckling of the big tech sector. It's done really, really badly over the last year. It's down like 50% pretty much from its all-time high. And look, Facebook is definitely going to be a growing company in the future. It's gotten over nearly 2 billion people on its platform. Like, how many more people do you want? Like, that's basically 1 in 5 on the whole people on the whole planet are on Facebook. Instagram, WhatsApp, Oculus, all these companies that are involved in it, and now the major focus on the metaverse is a basically unbelievable opportunity that is unrealized at the moment, and it's currently losing them a lot of money, like, which is not what you want to see in this environment, but they're investing to the future, and their ticker is also going to be changing to a Meta just in the next week or so. And yeah, look, this valuation has just gotten very, very silly. Like, so Facebook was touching nearly $1 trillion market cap not so long ago. Now it is around 500 billion. It has a PE ratio of 14. Bearing in mind the S&P generally trades at around an 18 to 20. Well, it could be about 18 to 25 now because things are more overvalued, but that's what it generally trades at. And this is now presenting a case where Facebook is now undervalued. So yeah, the forward PE I don't think is too accurate, or it could be because they're expending more money over the next while. But if you're going into analysis, which is here, you're seeing that basically they are growing by, as we go into analysis, you can see that we are growing by 7.5% this year, which is still growing in this harsh environment where they've been kind of cut down. They're still growing, not by as much as they wanted to originally or what they forecast, but they're still a growing company. And then you're seeing next year possibly an acceleration up to 16%, like, which is absolutely fantastic. This is, yeah, it's an acceleration in growth, and I think they're going to continue to accelerate in growth when the metaverse thing becomes more and more pragmatic and more realize of what it's all about. So, guys, like, Facebook, it's an unbelievable purchase at the moment from a valuation perspective, and also they do have growth because Facebook are going to continue to grow. So yeah, that's the first one of these 4 stocks. So the second one is Alphabet, which is Google. Like, so everybody knows Google. You use it probably every single day, and this is basically now coming from a valuation perspective. So Google is come down an awful lot this year. It was touching the near 3,000, and now it is just around 2,290. So yeah, this stock is becoming very attractive from a valuation perspective. It's around a 20 PE. It's growing at a bit of a faster rate than Facebook, but with Google, like, you're getting so much stuff. You're getting Google Search, you're getting YouTube, you're getting Android, and so on and so on. Like, they have a lot of stuff going on. So Google, like, it is one of the best stocks, in my opinion, in the entire market. I love the company. They have probably the best balance sheet as well. And yeah, look, their forward PE is around 19, which is not too dissimilar from where they are right now. But then if you're looking at their analysis, come on, so their analysis, they're growing around 15% this year and 15% next year, which probably should be revised, like, because it might change as we go towards the end of this year with the basically everyone predicting that there's going to be a recession. But these are great growth rates, and for the valuation that you're getting, like, and you're getting an unbelievable company here. I think it's very attractive, and it's definitely there are two that I would pick out of the big techs is Meta Platforms and Alphabet, well, Google and Facebook. So move on to the next one. The next one I have here is Qualcomm. So I made a video about this before, and Qualcomm is basically one of my favorite stocks that there is at the moment. They're getting very, very diversified into a lot of different areas, just as long as there's semiconductor stuff into phones and laptops, all that kind of stuff. They're also getting involved now in the automobile side of things as well. So they're getting more and more diversified. They've accelerated growth in the last few years. They haven't really cut their guidance towards the end of this year. People thought they would, but they haven't. They had a fantastic quarter last quarter as well. Their valuation is trading very, very low, really. It's around 14 PE, which I think is fantastic, like, for this company. Out of all the semiconductors, like, you're looking at, from a valuation perspective, you're looking probably at Intel and Qualcomm. I think they're absolutely fantastic. Yeah, so the forward PE is around 10 and the trading PE is 13.38. So yeah, look, this is definitely from a valuation point of view, it is definitely one that you should consider looking at or trying to understand more. And also their growth rate is, for the current year, is around 30%, but it's going to cut drastically to 8.1% next year. But I would see them coming in and beating that, to be honest. So yeah, that is why I would pick Qualcomm. I think they're a fantastic company. They're extremely well ran, getting more and more diversified products, and also they're growing at a nice rate, and the valuation is also attractive. And then we're going into the last one, which is a bit of more of a high risk. It's been absolutely battered stock. It is more of a growth stock, but it's one that I really do like for the future of, like, the metaverse and that kind of stuff. I do really like this stock, and that is Unity Software. So Unity Software, like, I was kind of in dollar cost averaging into Unity Software. I do think it's a great company. It could have further to fall. It's more of a high risk play. I think they've got great growth ahead of them. They're going to run into a few headwinds this year, as most companies are, as they kind of just try to find their footing. But I think this is a fantastic opportunity. Like, their software is fantastic. It's very, very similar to kind of Shopify model, very subscription based. Also getting a fee for how well you do, similar to Shopify. But I think they're a great company. They have a great product, and I think they're going to be in a great position to take advantage of the metaverse stuff that is coming over the next few years. And look, the valuation has come down massively. Like, so they peaked at around 210, and it went all the way down to 29, and now we're just at a 41. Like, so I think they're in a great situation. I think it's definitely one you should consider maybe looking at and trying to understand even more. But it definitely has further to fall if we do get further poor economic data and the markets do fall. Unity is going to fall as well. But guys, look, they have a great opportunity ahead of them. I think they're fantastic software. I think they're very, very well run. So I would definitely consider looking at these guys. So look, they're still forecasted to grow around 24% this year, and then maybe an acceleration again next year of 30%. Like, so yeah, look, it's definitely one to have a look at and trying to understand more and just kind of come to your own conclusions. So guys, that just wraps up the 4 stocks that I am buying at the moment. I'm basically kind of dollar cost averaging into these at the moment, just kind of to get a nice position in them, while things are, I think they're a bit low, but that's not to say they don't have further to fall. Like, we're in very uncertain times with rapidly high inflation, interest rates coming up higher as well, and things could definitely have further to fall, especially in the higher growth names such as Unity. But the other guys are becoming a lot more attractive. So like tech companies that are making a lot of cash, they are becoming more and more attractive. So guys, I hope you enjoyed this. I hope you got some ideas, possibly want to look at some of these companies even more yourself. And look guys, remember, this is not financial advice, and do check out all of our sponsors down below, Caffe Pompeii and also 35mm Vintage. And I hope you enjoyed this, and do hit the like and subscribe button as well. So thanks guys.